Hey, what's going on, guys? This is Daniel, one half of the Kwok Brothers, and look who we have here.
Hi, everyone. Stephen Hamilton here.
It's Steve. All right. So today's topic is Airbnb Business Tax Deductions. Let's go ahead and cue that intro and get right to it. Welcome back, guys, and today we are talking about Airbnb Business Tax Deductions, or should I say nightly rental tax deductions for specifically nightly rental investors. So I'm going to be kind of facilitating conversations and interviewing Steve on some things that may be able to help you out if you're interested in investing in nightly rentals. So first off, Steve, thanks for being here.
Always a pleasure.
Yeah.
Always a pleasure.
Yeah, and obviously you guys have seen Steve before if you guys are avid followers of the Kwok Brothers. And before we get to the content, I asked my first question. Do not forget to subscribe, like this video, click on the notification bell, share it to your mother, your father, your kids, whoever you want, but just please share it and spread the news, right? Spread the good news because we have an expert in here today who's going to be sharing some great knowledge. So thank you for being here. Question number one, tax-wise. Right, we all know a lot of rental property tax deductions, but what are some main differentiators between a main rental property and a nightly rental property in terms of your taxes?
There's a couple of different types of rental statuses that we look at. The first one is going to be your long-term rental, and that's going to be the person who signs a 1-year lease or an 8-month lease. The majority of a year could be year plus, etc. That's going to be just your normal run-of-the-mill rental. Then we have vacation and rental property. Vacation property could be 3 months, could be 4 months, could be that short term, but it's usually a guided less than 6-month rental term. And then we have our Airbnb and such. Airbnb specifically, that's usually going to be the person who rents for 7 nights or less. And that 7 nights is very important. Because under that 7 nights, it's considered a non-passive activity for an investor. So if your average tenant stays for the entire year, all of your tenants average out the number of nights, they're going to be looking at that time frame to see if you're going to be able to deduct your losses or not. And if your accountant's not asking that question, you need to be asking them why not. There's a certain section of the code that's very commonly misunderstood. It's section 469, and I know we have engineers out there. I know we have people who like to do research, so I'll just kind of prompt that. It's a complex area because it determines how we decide if something's passive or not. So we have a rental. I'll give you a hotel property, for instance. So the Marriott down the street, for instance, actually that's my prime example. Marriott is predicated on short-term 1, 2, 3 night stays. Your Airbnb, that's going to be your weekend stays, your 3 nights, your 4 nights, that type of stay. The Airbnb, the key is it fits into that line where it could be above or over that section. So you want to kind of nudge and push your tenants to be under that 8-night threshold.
So in terms of tax deductions, I know we talk a lot about cost segregation, we talk a lot about different things, but I guess my second question is, for a lot of individuals watching right now who maybe they have a nightly rental property, I have one, and or maybe they're looking to get into it. Okay. So for them, what are some tax deductions that not a whole lot of people know about that for you as a tax professional, you would recommend?
Well, that's actually a great question. Some of those deductions, the biggest one is going to be cost segregation. So for that new landlord with that Airbnb property, that short-term rental, I'm going to look for cost segregation in the first year. I can accelerate sometimes 20 to 25% of that property after I subtract out the land value into that first year. So I have a client who just bought a $207,000 rental property up in Michigan. It's a vacation property. They're looking at over $50,000 of current year deductions through depreciation. Now, the differences in things that we're going to have from an Airbnb type property to a long-term rental. With that Airbnb property, I'm going to have a much higher turnover for furnishings. I'm going to have turnover for carpet, flooring, appliances, things like that that might become damaged. But my cleaning is going to be more frequent. I might have to paint and touch up things on a more regular basis. So to look at that as a baseline is probably the first area I would look for deductions.
So now let's get a little bit more specific with certain numbers, right?
Okay.
Because you explained a lot of great concepts in terms of what people can do. And there are certainly things, talking points that they can go back to their CPA and tax professional and talk about.
Yep.
So let's say we have a hypothetical scenario, right? As many investors who are watching would. Let's say they buy a $150,000 house. It's 3 bedrooms, 2 baths. And let's say they spend $8,000 furnishing it for the sake of putting it on a platform such as Airbnb or HomeAway, VRBO. So they spend $8,000 on couches, mattresses, dressers.
General furnishings.
General
your
TV,
your
furnishings.
dresser, all that kind of stuff.
100%. So TV and everything. And let's say they even put some, some bushes and shrubs in front, right? So just right out of the gate there, if you were, their tax professional and they started this venture, what are some things that you would say to them?
Well, first step is itemize everything that you purchase. Break down all of your projects into their main categories. Here's the landscaping improvements that we did. Here are the furnishings that we put in. Here are the appliances that we put in. And by predicating all of those different categories, I'm able to break those down into their depreciable category. For example, your general household furnishings. Depending on what it is, it's gonna be 5 or 7 years. But under the current tax law, I can take 100% bonus depreciation on that. So I will still list it as a depreciation item, but I will get 100% deduction in that first year.
Wow. So from what it sounds like, it's entirely possible for the individual starting that venture.
That whole 8K would be deductible.
Right, absolutely. That's kind of what I was alluding to.
Now it would be deductible through depreciation instead of just repairs, maintenance, that type of thing.
Right.
That can help trigger an audit.
Right, yeah, absolutely, right. And I'm sure a lot of people are wondering, if for a lot of people who buy the furniture, right, they'll go to, Ashley Home Furniture, right, store, and they'll buy that couch, they'll buy the dresser, they'll buy, right? For them, they're probably thinking, hey, this is a cost of me doing business.
That's correct.
And
it is a cost. And when we have to repair that couch or we have to replace that couch, replace that mattress, those are typically going to be simple repairs. As long as you're not spending over $2,500 on it, it's going to be a simple deduction right then and there.
Wow.
So it's considered what's called de minimis.
Okay.
And even if it's over that threshold, if we're still looking at property that's 5, 7, 15 years, we're still going to be able to end up deducting it in full in that first year with bonus depreciation.
Wow, very good.
So right now is the perfect time to invest in all of your equipment, furniture, that type of thing.
And that's so fitting because every year when it comes to having a property on nightly rentals, there's always something, right?
Yeah.
Like there's always something.
There is literally always something.
Yeah.
I have a couple of clients down in Texas and they're calling me with miscellaneous questions. Okay, so we just had a tenant do this.
Yeah.
I actually have a great one. I have a client who had to add into their lease that they don't allow combustion engines to be run inside of the property.
Okay.
They ended up having to go through, replace all their smoke detectors, replace all of those items, because somebody started their motorcycle engine and was tuning it in their front living room.
Oh, wow. Incredible.
It's crazy the things that we see happen.
Right, and those are deductions, right?
Those are deductions. That's a general repair that they have to make for life code.
I see. Very good, very good. So last question here, just kind of wrap this video.
It's not deductible.
Casino, right? Yeah. So what are some questions that our viewers who are watching can ask their CPA and tax professional to really see if they're up to date in terms of what you know?
That's a great question.
Especially with nightly rentals.
That's a great question. The first one is ask them if it's reported on Schedule E or Schedule C. The simple version is if you are not providing services to the tenant, it goes on Schedule E. So your average Airbnb is going to be on Schedule E. Now, an actual B&B, a bed and breakfast where I'm providing meals in the morning, that can actually be a self-employed activity.
I see.
But your average Airbnb is going to be considered directly on Schedule E.
Yeah.
So if there is a net profit, there's no self-employment tax.
Oh, very good. Yeah.
That right there is probably the biggest one. If they don't have an answer to that,
so the question was, do I put it on my Schedule E or do I put it on my Schedule C?
And the answer is going to be E.
The answer is going to be E. I see. Which will kind of tell you, like if they say C, right, they're...
Check, please.
Yeah, right. Exactly. So what are some other questions that they can ask?
Definitely. Ultimately, find out how much they know about Airbnb activities. Ask them about the terms of nights. Ask them about that 7-night threshold I mentioned. If it's rented for an average of 8 days, is it considered passive or non-passive? That's a big one. You can ask them if it's subject to self-employment tax, and that'll clear up a lot of answers. You'll find that more and more accountants are starting to get a little more savvy and understand what's going on with the frequency of Airbnb, but there's a strong number that really don't.
Yeah, one of the biggest differentiators, for me, in terms of picking a CPA, is do they invest themselves?
That's a huge one.
For me, I know that's a big one.
And even so, there's so many different ways to invest in real estate.
Yeah.
I'll give you an example. I've done notes, I've done flips, I've done rentals. I hate tax liens personally, but
I'm not a fan either.
It's too slow moving for me.
Same.
So it really depends on their comfort level, and not every CPA wants to invest. So I wouldn't use that as my number one item. Some of them, they've made their investments in the past. They might own their own building, and they're just looking to hit that retirement pay. I've written posts and different things about all different questions to ask an accountant. And there is no right answer for some of them. It's all about finding somebody who's comfortable for your situation.
And you say it all the time, it takes a genius to invest in real estate and not, and
still pay taxes.
And still pay taxes,
Yep.
So for me, it's like, well, if I have somebody who's very knowledgeable about taxes, they're gonna make the decision to invest in real estate.
That's correct.
That for me, it's just that simple. But yeah, those are some great questions, and I'm sure you have more information on how to find good tax professionals.
I can send you over a list, and if you want to post that, you can go ahead and post that list.
Yeah, and I know you have newsletters.
I do have newsletters. I have a blog. I have newsletters. I stay pretty active, and I update a lot of information.
And where do we find all that?
Well, most of that can be found on my website, hamiltontax.net. We are on Twitter. We're on LinkedIn. We stay pretty active. I know I have answered questions for a while on different websites. So
well, even on different Facebook groups that we, Sammy
actually,
and I
that's a big
run,
one. That's definitely a big one.
You answer a lot of questions there. So.
I'm on your Facebook group, so if there's any questions, they're welcome to prompt and ask me a question there.
Yeah, and that Facebook group, guys, it's Landlords and Passive Income Mastermind. If you guys want to join and click.
You have a couple other ones though.
We do. We have the Clock Brothers Inner Circle, but they have to be part of our program to join that. Okay. And then we got the big one, which is Real Estate Investors. And that's got over, I think, like 100,000 members or something like that.
That's a lot of information.
It's a lot of information, right? But anyways, hey, let's all thank Steve for being here. So give yourselves a virtual round of applause.
Thank you guys for having me. It's always a pleasure.
Always a pleasure. Don't forget, guys, to subscribe and like this video and share it, right? Some really cool information. If you got a friend who's getting into nightly rental investing, this is definitely a great video for them to see.
Or use this to jump in yourself.
That's absolutely right. So thanks, guys. I'll see you guys in the next video.